Hello, everybody. Welcome to the Snowflake, ticker symbol SNOW IPO analysis. This is StockerFinance. I am your host, David Scheuer. Make sure to follow me on Twitter at StockerFinance for more information. Today, we're going to be taking a look at Snowflake, and the main reference we're going to be using for this analyzation is the Form S-1, which is a registration statement to the Securities and Exchange Commission. Let's go on and look at the first part of this statement, which basically is a summary of what their company is and what they do. Now, they are a cloud-based data warehousing. That is kind of the main part of their business. And they say they're cloud. And right before I read this whole thing, there's a lot of different words to go over here. It's a very dense, dense statement that we're going through right now. And I'm just going to paraphrase as well as highlight some of the most important parts. So if you want to go ahead and read it in more further detail, go ahead and look up the Form S-1 online and follow along with me. Or you can pause the video and read through the entire page right in front of you. So anyways, let's go ahead and get back into it. They say our cloud data platform is the innovative technology that powers the data cloud. Our platform enables customers to consolidate data into a single source of truth to drive meaningful business insights, build data-driven applications, and share data. We deliver our platform through a customer-centric, consumption-based business model, only charging customers for the resources they use. Then they go on to say who their kind of target audience is here and how they help businesses, etc. So they say our platform supports a wide range of use cases that enable our customers' most important business objectives, including data engineering, data lake, data warehousing, data science, data applications, and data sharing. For example, CIOs choose us to migrate petabytes of raw data to the public cloud and transform it into analytics-ready data. CMOs choose us to create 360-degree customer views. Business leaders choose us to distill insights from their most important business metrics. Data scientists choose us to simplify data transformation to build better machine learning algorithms. Businesses choose us as the analytical engine to power their digital services. CEOs choose us as a strategic partner to accelerate their cloud strategies and deliver new revenue-generating services. From July 1st, 2020 to July 31st, 2020, we processed an average of 507 million daily queries across all of our customer accounts, up from an average of 254 million daily queries during the corresponding month of the prior fiscal year. What you're going to notice about this company is they're growing really rapidly. Now, they actually were founded back in 2012, and that a CEO change in 2014, and then that a recent CEO change in 2019. And we're going to talk about the CEO changes at the end of this video. There's a good article that I'll reference that really explains it very well. But anyways, this company is growing rapidly. If you look at some of the data that they gave us here, they had revenue growth from Q2 year over year, 121% growth there, 158% net retention, 3,117 customers, which has grown substantially, and we'll see those numbers in a second here. 56 customers that generate over $1 million in revenue, and that's up as well. We'll look at go into the data to explain more of these numbers, since this is just kind of a brief overview that they're giving us on this image here. 500 million plus daily queries, 71 NPS. So some strong data here, and as you can tell, they give us some strong momentum here in this little random image. We'll look at the actual raw data in a second here, but as you can tell, they project that to Q2 21 they'll have 121% Q2 year over year growth. Now, I think this graph is a little deceiving because they also have, future projections on this graph. And I'm not sure if that 121% Q2 year over year growth is projecting it from now till Q2 21 or what it's doing there. This graph is a little deceiving. They are trying to sell to you and get you to invest in their company, so just be wary of that. But we'll look in the data that the revenue growth is very strong. And let's go on and keep, talking about the industry that they're dealing with, which I think is a very fast growing and important industry, especially will become a very important industry. We're seeing some major players invest in cloud data and cloud adoption as well, especially, Microsoft, Alibaba, Google, some of the biggest companies in even Amazon as well. Some of the biggest companies in the world are actually, the biggest companies in the world are investing significantly in the adoption of cloud computing, and cloud data, which is a great sign for this company. Although it's not doing the same things as them, it's great that they're all doing some of the same things, but it's great that this industry is growing as a whole. Anyways, so industry background. Important technology and industry trends are changing the ways organizations leverage their data. This includes data is becoming paramount to business success. The explosion of data is offering richer insights. Cloud adoption is accelerating and diversifying. Everyone is becoming a data consumer. Technology consumption is moving from fixed capacity to a utility. I agree with almost all of those statements there. Anyways, if we go ahead and look at, and this, I believe, this is the limitations of existing data technology. So what are the limitations of what is currently available, and why is our technology better than what's currently available? Well, let's say what's currently available is it has the inability to simultaneously support many use cases and users. It lacks optimized price performance. It's difficult to use. It's expensive to manage and maintain. It has an inability to support a multi-cloud cross-region strategy, and an inability to facilitate data sharing. And if you want to go ahead and read the rest of these, I'm just kind of reading off the highlights here. You can go ahead and pause the video and do that if you'd like. Now, let's look at some of the benefits to their customers. So this is kind of their selling points. Pretend you're a customer right now, and let's look at the selling points to you. And you can probably pretend you're a business, since that's who the main customers for this service is. They transform into data-driven business. They're going to consolidate data into a single analytics-ready source of truth. They're going to increase your agility and augment insights through seamless data sharing. They're going to help you create new monetization streams and data-driven applications. They're going to help you benefit from a global multi-cloud strategy. They're also going to help you reduce time managing infrastructure, and they're going to help you enable greater data access through enhanced data governance. Now, all of these things, especially the reduced time, the new monetization streams and data-driven applications, and increased agility, especially for very large businesses, which some of their biggest customers are very large businesses. These are things that, are going to be really important to them and can help their businesses significantly. So anyways, if we continue on here, and they talk about the rise of the data cloud here, they talk about their solution to this whole situation. And data silos have been an enduring challenge in blocking organizations from realizing the full value of their data. To solve this problem, organizations have invested billions of dollars in disparate on-premises systems, infrastructure. I don't know why I was just messing up my words right there. Anyways, infrastructure clouds and application clouds. Yet the data silo problem persists. So the data cloud is our vision of a world without data silos, allowing organizations to access, share, and derive better insights from their data. So here's their solution to that problem. They said that their cloud data platform is built on a cloud-native architecture that leverages the massive scalability and performance of the public cloud. Key elements of our platform include a diverse data types, massive scalability of data volumes, multiple use cases and users simultaneously, optimized price performance, easy to use, delivered as a service with no overhead, multi-cloud and multi-region. What you'll notice about each of these is a direct counter-argument to the existing technology's problems that we read a little bit ago. And that is a great sign that their technology, they're basically saying our technology is significantly better than what is right now available, and it solves, these problems. So that's a good sign, but it's also kind of a selling point of their product that they're giving to us. Now let's move into some hard numbers here. And this is very consolidated, and you'll see in a bit here, they don't give a ton of information on their income statement, balance sheet, etc. So anyways, if we look at their consolidated statements of operations, we see that the revenue grew pretty substantially. From the fiscal year, it grew from 96 million to 246.7 million. And in the 6 months ended, it grew from 104 million to 241.2 million. That's over 100% increase in revenue, which is substantial. So if they can, keep up that growth, they're on a very good trajectory. However, we do run into some issues when we look at the fiscal year ending in terms of an operating loss and their net loss. So for the fiscal year of 2019 to 2020, they had a net loss increase of $4 per share from $4.67 to $7.77. Overall, 178 million to 348 million. But if we look at the 6 months ended from 2019 to 2020, you'll notice it's a very different story. We see their operating loss decrease from 182 million to 174 million. Their net loss decreases from 177 million to 171 million. And their per share loss decreases from 425 to 301, which is a very good sign. So depending how you look on the time frames, it can very drastically change the numbers. And that's why these statements can be very confusing to look at, and it can be very, very hard to get an idea of how this company is doing, especially when we haven't seen any earnings and haven't seen their numbers in more details, is what I'm trying to say. Now let's move on here and let's look at some key business metrics they give us. So they give us their product revenue in millions, and in the fiscal year, 95.7 million to 252 million. 6 months ended, 100 million to 227 million. The remaining performance obligations grew from 128 million to 426 million, and 6 months ended, 221 million to 688 million. But their total customers increased substantially. So in the 6 months ended, it grew from 1,547 customers to 3,117 customers. That's a massive increase in customers, which is great to see that they're not even generating more revenue, but they're also getting a lot more individual customers. Not just a lot more, but a substantially more customers. I mean, that's a 100% increase in the amount of customers that they're receiving there. On top of that, from January 2019 to 2020, their total customers increased 948 to 2,392. Anyways, on top of that, their customers with trailing 12-month product revenue greater than 1 million. And we already took a look at this number, which was, they said the total was 56 right now. Well, that increased from the same time period, 6 months ended in 2019, from 22 to 56. So again, 100% increase in that metric there, which is really great to see. Now let's look at their consolidated balance sheet data. And we're going to look at cash and cash equivalents, short-term and long-term investments, which is 886.8 million. So that's a substantial amount of cash that they have, and they're going to be raising even more cash up till this IPO. And then during the IPO, I suspect this IPO will go very, very well. And we'll see why in a second here with their CEO switch. Their total assets are 1.4 billion. One thing I want to say about this consolidated balance sheet is they took the word consolidated and took it to as far as they could. This is a very consolidated balance sheet. I mean, we're really not getting much information. Total assets. Okay, we know 800, we know, a significant amount of that is their cash, but what else is the rest of it? There's a lot of details that I feel like are missing from this balance sheet that I'd like to see. So once they have an earnings, I'll be a lot more confident in this company, especially if the earnings show even further growth. They show all the assets divided up into different sections, and just some more information, along with different information in terms of its liabilities, etc. So let's go ahead and look at another thing here. Their stockholders' equity is at a deficit, which is 651 million. So that means their liabilities are greater than their total assets right now, since stockholders' equity is simply your total assets minus your total liabilities. So the fact that it's at a deficit is a little worrying, but compared to their pro forma, it is less than that. Their accumulated deficit is 871 million. So they have some work to do in terms of getting out of this deficit here, but if they keep growing, increasing their margins, and eventually become profitable, then that'll change very quickly. It just depends on when that'll happen. But with the new CEO change, and we'll read about that CEO in a second here, in this article right here, you'll see that I have some confidence in their leadership to make that happen. So this article, I think, it goes over mainly the situation with their CEOs, since leadership is a very important part of a company, especially when they're going to IPO. Now, this just kind of briefly goes over their company again. Snowflake supplies a cloud-based data warehousing service that helps companies analyze data. Although it is losing money, posting a net loss narrowed to 171.3 million in the first half of 2020, which is down 6 million from the year before, as we saw. Snowflake sales grew 121% in the July 2020 ending quarter, far faster than its rival Datadog, whose revenues were up 68% in the latest quarter. Now, I'm going to be honest here, I have not researched its rival Datadog, but the fact that this article at least states it's doing significantly, growing significantly faster compared to its rival Datadog is a good sign. But again, I haven't done much research on that competitor, so it's hard for me to make a very accurate comparison here in terms of how these companies are doing or where they are in their lifespans, etc. So Snowflake is backed by an impressive array of investors, most notably Sequoia. It was valued at $12.4 billion when it last raised capital in February when it filed confidentially for its IPO. So that's a pretty substantial valuation for a company that's losing money. But if it continues, it's hard to value tech companies right now, and they did give us limited amount of data to deal with on this in terms of their balance sheet. And just all over the place here, income statement, etc. So we're dealing with limited data here. They didn't give us a number of shares that they're going to give out or a price that their shares are going to sell at least not yet. Hopefully they will do that very soon, though, and then we can figure that out and get a better idea of whether this company will be a buy when it IPOs or whether we should hold off on purchasing shares of this company. But the growth that this company is experiencing is definitely attractive. So now let's go on, and these two CEOs here. So anyways, their first CEO, Bob Muglia, or actually I think he was the second CEO, he ran the company from 2014, and then the current CEO joined in August 2019, whose name is Frank Slootman. I might be pronouncing that wrong, I'm sorry. So Slootman has a very successful track record of growing private companies and making money for investors. Apparently, he took Data Domain public in 2007 and sold it to EMC in 2009 for $2.4 billion before leading ServiceNow's IPO. And apparently the stock is up a whopping 18.6-fold since its June 2012 IPO, which is a very good sign that he has that experience. A Snowflake IPO will not be the end of its journey. As Slootman told me this February, an IPO for Snowflake will be an entry event, not an exit. I've done 2 in my life. The IPO is an unwritten contract between employees and the company so they can realize their investment. That's a great sign. He's not just seeing this as a way to exit and make a quick buck, or I guess a very large buck. He is doing this as a long-term strategy for Snowflake, saying it's not just an entry, it's not just an exit, it's an entry event to further grow this company as a whole. Now let's keep going and talk about their CEO before this guy, Muglia. I'm definitely pronouncing that wrong. He was a 20-year Microsoft veteran who was responsible for its $16 billion Windows Server, SQL Server, System Center, and Azure. Azure, by the way, is Microsoft's cloud-based system there. He joined Snowflake as CEO in 2014. He told me in June 2018 that demand for Snowflake has been spiking. Its customer count for the year ending January 2018 was up 300%, which is very substantial in terms of percentage. Now, the hard thing about percentage, especially when you're dealing with a small amount of customers, is growing from 1,000 or 100 customers to 200 customers. You could say that's a 100% increase, but that's not very many customers. But going from 10,000 customers to 10,500 customers, well, you're 10,400. Well, you gain double or quadruple what the 100 to 200 customer company gained, but the percentage is significantly less. So that is one thing with smaller companies they have to be aware of. When you see numbers like 300%, 500%, it can seem substantial, but in terms of the actual number of customers, it can actually not be that many. But we already looked at the number of customers this company was gaining, especially the ones that are generating this company over $1 million a year in revenue, and it's a fairly substantial amount for this company. So he also described how Capital One, which now accounts for 11% of Snowflake's revenue, according to CNBC, became a customer. According to Muglia, Capital One was way ahead of the crowd. In 2013, its CEO decided to move its entire IT operation onto the cloud. The CEO wanted to change the culture of the company. He thought that the technology was so meaningful that Capital One needed to be more integrated into Silicon Valley. Amazon and Microsoft both offer data warehousing, but Capital One picked Snowflake. They don't take full advantage of the cloud, and Capital One is looking for a shift forward. They concluded that Teradata could not take them into the cloud, and they picked Snowflake because it could run 250 concurrent data analysis queries compared to 60 for Teradata at a much lower price, 25% to 30% of what Teradata charges. So that's a really good sign that this company attracted a customer like Capital One, which is a very large business, and stole them from Microsoft and Amazon, or didn't steal them, but it attracted them to them instead of Capital One going to these other massive companies that are already extremely established. So that's a good sign for this company in terms of its advertising and the way it's advertising, and as well as just the technology that it's dealing with. So now if we continue on with this article, after 30 years of investing in on-premise computing, companies are realizing the excuse for not going to the cloud are bullshit. They are really realizing that they have to go to the cloud in order to attract talent because on-premise computing cannot operate modern software. Snowflake, which added 500 new customers in the quarter ending January 2020, was gaining market share due to its nonlinear scale and performance, he said. We can handle 1,000-fold increases in database usage from terabytes to petabytes, and we provide customers with unlimited computing power that can reduce compute times from hours or days to seconds or minutes. When Snowflake lands a new customer, they increase their use of its product very rapidly. Our clients are increasing the utilization rate at over 100%. They don't need contracts, and we invoice them on demand, which will increase rapidly from $0 to $10 million in revenue. That's a great sign for how they're actually, invoicing clients, getting their revenue, as well as the utilization rate for their product. So This is kind of a summary of why they switched CEOs. Reading between the lines, I'm guessing that Snowflake's board decided it needed a new CEO who had taken the company public successfully. As he told me in August 2019, we are in scaling mode. We are building an investable model that will yield a predictable yield on resources. We're doing an organization building, boosting efficiency, increasing productivity, strengthening our executive staff, and making changes to distribution and R&D. We are preparing our systems, compliance, and processes for going public. So the reason for the CEO switch is simply to take this company public. And because the CEOs had so many, multiple successful IPOs in the past, I absolutely think, especially with all the, immense growth of this company, that this company will have a phenomenal IPO. However, we still need more information as whether this company is going to be overvalued when it IPOs, as happens with a lot of tech companies these days, or if we're going to purchase this company at a discount, which would be awesome. I also want to wait and see an earnings release to see whether, to get some more details on its numbers and financials, as well as see some more sustained growth and a direct path towards profitability is what I am really looking for in this company. So overall, my feelings on this company. Well, I want to do more research, as I said. I also want to wait for more information to be released, such as the number of shares that they're going to release and the price they're going to sell each share at. Just a bunch of other information that has not yet come out yet for this company. I want to see some, quarterly earnings reports, and I want to see more of a direct path towards profitability. There's 6 months, as we saw, their total loss decreased, but the fiscal year increased pretty substantially. So it's hard to tell right now on this company. I also just want more information overall. So I expect the IPO, though, to do extremely well with the new CEO and just with this company's growth, as well as just, we're in the day and age now where tech companies do extremely well when they IPO. So this company is operating in a growing market, which is a good sign. It's most likely going to be boosted by the current global situation. Also, it appears to be heading towards profitability. As I said, though, it's not really a clear path towards profitability, but it'll definitely still be a while before they reach that, unless their quarterly earnings says otherwise. But again, we just need more information. Anyways, thanks for watching. Please subscribe. If you're a data scientist or someone who knows a lot more about this industry and this topic, please leave some comments below. Correct me if I missaid anything or about your opinion on this company, since this industry is not one that I am entirely, experienced in. Anyways, check out these videos and follow me at StockerFinance on Twitter for more information, finance news, and for just some good times. Check out these videos, subscribe, and I'll see you guys in the next video. Peace out.